Hello and welcome back to Swing Trading Masterclass by Wealthy Education. In this video, we're going to take a look at a two candlestick pattern called Tweezer top and Tweezer bottom. The Tweezer top is just a couple of shooting stars in a row. Tweezer bottom, a couple of hammers. Basically, what you're looking for is two candlesticks that have long arms in a row and basically end right around the same area. They don't have to be to the pip or to the tick, but reasonably close. A little bit of artistry there. And they tell you exactly what you think they would tell you. In this case, you would have the market rallying at the Tweezer top. Sellers come back in and they push it lower. Buyers come in, but the sellers push them back again for a second candlestick. A breakdown below these two candlesticks is a sell signal. Your stop loss would go on the other side. Now, obviously, it's the exact opposite in the Tweezer bottom. We continue lower, we pop. We continue lower. The buyers come back in and step things up. A break above the second candlestick is a buy signal, and your stop loss goes on the other one, the other side of them. So here are a couple of examples of Tweezer tops. Now, you could say in this Wells Fargo daily chart that in theory, this is a Tweezer top, but you don't like the candlestick to be too much longer than the other one. This is more of a Tweezer top. You could make an argument for that, but again, a little shaky. This one, to me, looks more important. And then, of course, is a bearish sign. We break down below the bottom of the second candlestick. You put your stop loss here, and it drops pretty significantly. Here in the CAD yen, the Canadian dollar Japanese yen, you have on the hourly chart, you have tweezers there. You can see a couple of long candlesticks right there. Buying on a break above the top, putting a stop loss underneath, and it's off to the races. Ethereum has a couple of tweezers, or a couple of shooting stars, tweezer top there at an extended run higher. Once you break down below these two candlesticks, pretty straight drop from there. Very simple pattern. You're already training yourself to look for it. It's just a double inverted hammer, or excuse me, a double hammer, a double shooting star, something like that, basically. And you're looking to take on a breakdown of the complete reversal. It's just the market being a little bit more stubborn. You rally, you pull back, you rally, you pull back, and then you break down. But the fact that the sellers were so resilient here really opens up your eyes to a major shift in attitude. In the next video, I'll throw some indicators on these charts, and we'll take a look at how we could have got a little bit more confirmation.